Time now for the markets with Artis, and this segment begins with cattle.
You know, Amy, before we start though, obviously Leighton Spann is not here today. He and his wife Catherine, 30-year anniversary, so that's why he's not here today.
Congratulations to them.
That's right, congratulations to them. But talking about cattle, the monthly cattle on feed report was in line with expectations. The bigger story may be though that beef futures continue to imply higher retail prices coming for the spring. Also ahead, analysts believe that an increase in U.S. corn exports is likely, as a twin-state forest products mill in our area is set to reopen in 2013. Well, we begin by taking an in-depth look at the November cattle on feed numbers. Extension Ag economist John Michael Riley turns the November 16th report fairly neutral. He told Farmweek's Leighton Spann on Tuesday that the downward trend in cattle placements is still in place.
John and Michael, you say it's almost eerie how close this report matched the pre-report guesses.
It was very close. The second month in a row that we've had the pre-report expectations pretty much in line with what USD actually reported in terms of the number of cattle on feed. That number came in just over 11 million head, down about 5%. The trade was expecting right around that same number. Placements 2.18 million head. A big drop, down 13% from a year ago. But keep in mind, again, those year ago numbers were slightly inflated due to last year's drought. But we are seeing placements just really drop off as a result of last year's drought and this year's drought. So many cattle were forced to move off of farms and into feedlots. So but still very much in line with expectations.
But definitely a trend here, the fifth month in a row about placements dropping. So the trend is definitely anchored here.
That's correct. The number of placements down, heavier placements across the board, mostly due to the fact that there weren't very many lightweight placements compared to last year. Two things in play there. There wasn't this true need to get cattle off the farm and into a feedlot at these lighter weights, but also you had these high corn prices, which kept people from really thinking about placing lightweight cattle that needed to be fed for a longer extended period of time. Heavier cattle placed for the most part should put cattle coming off feed a little earlier than normal. So we're probably going to see a big push of cattle coming off feed in the next couple of months. But once that push gets through, there's just doesn't look like there's going to be very many cattle available.
So near term, again, the supplies are definitely running out of cold storage right now.
That's correct.
And so what do we think will happen come early 2013? When do we think that these supplies are going to be dwindling?
Well, it should happen, you know, after the first quarter, somewhere as we turn to the second quarter of the 2013, as we get this push of cattle out. We've been dipping into Mexico to get cattle out of there. They're in the same drought as we are. Those supplies are going to run thin. So I say, you know, sometime April through start of the summer, we're going to start seeing dwindling beef supplies as a result of these droughts that we've experienced and the reduction in the cow herd.
Those dwindling beef supplies are expected to create a shortage situation, which could translate to higher prices at the meat counter before 2013 is too far along. Analyst Alan Brugler is one of those who warned that consumers could steer away from beef for a while.
Live cattle are already pricing in record high retail prices for next spring. The question is, will the consumer pay it? All right, if you take the futures trades that we're seeing, the 133, 135, 136, if you go far enough out, that would imply as much as $210 for choice cutouts. We've never been able to make a price above 200 stick. So the board's saying, the consumer, we're going to have less beef, you're going to have to pay up. The question is, will they pay up or will they shift to chicken or to turkey or something else?
Our trivia quiz this week deals with forestry. Let's give you the question: how many sawmills are in operation in Mississippi? The answer is either 60 or 75 or 89 or 100. You'll find out in a few more minutes. Well, many analysts are optimistic about what's in store for the corn sector. One of them is Virgil Robinson, who says that this market is firmly underpinned. He believes growth in export sales will compensate for any headwinds related to the drought or the navigation troubles on the Mississippi River.
Should exports increase, and I sense and believe they will in the second half of this crop year, as the spread between, for example, FOB New Orleans corn and FOB Paranagua or Santos corn, that spread is narrowed pretty dramatically for January and February, which would imply the supply of grain down there has in fact dwindled. So I expect the USDA to address the export issue in their up-and-coming WASDE report. Should they leave that figure unchanged, they too are obviously expecting a pretty significant increase in export sales the second half of the crop year.
Now, the WASDE report, or the World Ag Supply and Demand estimates that Virgil referenced, that report will be released on Tuesday, December 11th. That will be in conjunction with the release of the monthly crop production numbers by the USDA. Well, just ahead of Thanksgiving comes word that a shuttered forest products mill just east of the Mississippi-Alabama state line will reopen soon. Louisiana-Pacific Corporation says that it will reopen its oriented strand board mill in Clark County, Alabama in April. Now, the OSB mill is about 35 miles east of Waynesboro, Mississippi. The Daily Woodwire reports that production will continue to ramp up through the year, which is good news. Well, before this week's feature story is the trivia answer for you. Extension Assistant Professor David Jones says there are more than 100 hardwood and softwood sawmills in operation in the state, so D is the correct choice.